Now he and his wife and a great crew of folks do Barrett Insurance Agency, stumping you with a trivia question. I love it.
I'm not liking that at all.
No. We're not going to put it on the air. We'll just we'll go more with it after.
I feel stupid.
Well,
he's giving me all these hints, and he's making it sound like based on these hints, I should just have the definitive answer.
That's what trivia is all about.
I don't know.
Eddie will do it this afternoon at 4:15, maybe with this one.
Nice.
All right, insurance. Last week we talked about the importance of insurance coverage on a short-term rental property. In other words, Joe and Janet own a property. They don't live there, but they rent it out for short terms, a couple of days, a night, a week, a month, whatever. What do you want to talk about this morning?
Yeah, and real quickly with the short term, they also could short term rent their primary residence when maybe they're away. What if they go away for a season? What if they go away for the winter? Maybe they want to short-term rent that thing over the ski season. Who knows? Anything's possible these days. People are doing a little bit of everything.
And that wouldn't be like inviting cousin Caleb to come over and watch the house. I mean, this would be an actual rental
a monetary opportunity where they're short-term renting. And we see it all, Jeff. Short-term rentals. We've even seen people renting campsites. So there's a little bit of everything out there right now.
I know there's a couple of them up the road here.
Yeah. So it keeps us on our toes, and maybe that's why I don't have enough brain power for your trivia question this morning. I don't know.
All right, kids are have headed off to school, and they've got to have insurance with them. We've talked in the past how kids can be on mom and dad's insurance for a certain number of years.
Yeah. So and that actually leads to a conversation that I wanted to have. So I'm very glad you brought that up because, being you're really as a dependent of the household, as a child going to school, you really do still fall under mom and dad's policy for their home. And parents are going, well, they don't own the home. What the heck are you talking about there, Palsy? And what I'm talking about is their personal property and their liability. They're still covered by definition of an insured under the policy if they're a dependent of the household, even if they're away at school, and not living in a dorm. Now, we've talked about the gray areas of being in a dorm and having coverage automatically versus being in an apartment and you're going to want a renter's policy. That's a little bit of a different ball of wax. But in the general sense, they really can be considered still insured under the policy in the grand scheme of things. It's important to understand that. But where we see things sometimes go longer than they should is the auto insurance. We see kids sometimes on mom and dad's auto policies well into their 20s or even further. We've seen some in their 30s, 40s, and 50s still on their parents' policy. That's not necessarily... I know what the reasoning is. It makes absolute sense. You're trying to get multi-car discounts and maybe multi-policy discounts, but it's not necessarily appropriate because as the child grows older, it's very unlikely they're living in your household. So if they're not living in your household, they really should not be on your auto policy. They should be on their own auto policy with their own car.
Okay, that was a question I was going to ask as you led into that there. So let's say 35-year-old Tommy lives in West Burke. Mom and dad live in St. Johnsbury.
Yes, Tommy should definitively be on his own auto insurance policy.
All right. Yeah. And Tommy can get a discount by not being on mom and dad's insurance by getting renter's insurance.
Renter's insurance, absolutely. The game that a lot of people play, and I completely, like I said, understand it, is that they're looking for the multi-car discount is primarily what they're doing because that's a pretty significant discount. I could be paying $800 a year for, and I'm just throwing arbitrary numbers, don't put anything behind this, but let's say I'm paying $800 a year if I insure just my car. Well, now I'm going to add a second car. The car that I was just paying $800 a year for now is maybe $625 a year because I got the multi-car discount. Now, don't forget, I still have that other vehicle that I'm insuring, so there's still more cost there. But there is a pretty good multi-car discount available with most companies. So that's really the focal point, I think, for a lot of people. But it's not necessarily the appropriate way to do it because you got to think about it. If you have people on your policy that do not live in your household, you've got different garaging addresses. And think about it. Garaging addresses, zip codes, geographic location are all factors in obtaining rate when rating an auto insurance policy. So I think if the companies knew that this was the case, they'd probably tell you to not do it. I think that's the case. Then I swear, Jeff, I tell people this all the time. The whole statement, ignorance is bliss. I swear that's the insurance industry. If they don't know about it, they're fine with it. And I get it. But if they don't know about it and they're fine with it because you're paying, right? And there's no problems. Where the fine with it can come to a screeching halt is if an accident occurs, right? Let's say, for example, you've decided with your vehicle you're going to start delivering pizza, all right? Or you're going to start doing an Uber or a Lyft, but you don't tell your auto insurance you're doing any of that. And then let's say you have an accident. The auto insurance can deny the claim because you are now doing something that was not presented and was not a factual part of the contract. And they can say, well, we can't pay this because you're using your vehicle now for business. And when you came to us, you were told us you were just driving it back and forth to work, or even worse, pleasure use, but you're in fact using it for business and gaining monetarily on it. So there's a lot of things to think about there.
I'm going to try my memory out here, okay? We do this quite frequently.
All right.
Okay, so let's use the Uber and Lyft, or even, locally, RCT driving, okay?
Interestingly enough, most companies are cool with the RCT thing because that's more of a volunteer thing. They get compensated on their mileage, but most of the companies I talk to are cool with that because they consider that volunteering.
Okay. What I was going to say is it's not just that an actual motor vehicle accident that you're responsible for with an Uber and a Lyft, personal injury.
Lyft, I'm sorry, what was I saying? Yeah, liability. I mean, you have liability of the accident. So if you were...
Shut your finger in the door.
Or if you run into somebody driving in the course of that business activity and hurt somebody horribly or even worse, kill them, then there's some liability exposure that could be left not covered. And that's very concerning, very concerning. So it's like the commercial that I know that I need to redo because it's older than dirt. The errors on the air, but the focal point of that commercial doesn't change. The message of that commercial doesn't change. Insurance is only as good as it can be when you have a claim. So don't find out where your problems may lie if you're trying to skirt the system and then have a claim.
All right, not a ton of time left here, but I want to go back to the multi-car, okay? A friend of mine has no less, with his wife and his vehicles, no less than 4, possibly 5 daily driver vehicles. In other words, truck 1, truck 2, car 3, and so on and
just
such
for 2
forth.
people?
Uh-huh.
So they just rotate them out? Is that what they do?
No, well, I feel like driving this into work today.
Yeah.
All right, so that is what most folks would think of as multi-car. But what about seasonal? You get those multi-car discounts if you have a car that you only drive part of the year?
Absolutely. In fact, I love that as an example. Now, when it comes to seasonal vehicles, maybe you've got a sports car or a convertible that you are parking in a safe area. And I mean, like, away from being potentially struck by other vehicles, maybe in a garage or in a carport or what have you. You can reduce those down to comprehensive only if you don't have a loan or a lien release on those vehicles. And comprehensive only is going to cover fire, theft, vandalism, falling objects, mice getting in there. It's the stuff that's going to cover a vehicle while it's parked. By having the comprehensive only, you're reducing the cost of that vehicle, but you're still keeping the multi-vehicle if you have another car. So there are some good ways to do that as well.
Well, we know a lot of folks out there have their seasonal vehicles, so that's why we brought it up. Okay.
Yeah, this is the time of year I hate because they're all calling to suspend coverage on them. Yeah. I'm like, well, there's a sign of the season.
Drop it back. Tell them how to get in touch with you, Mike.
Give us a call, 748-5224. You can find us on Portland Street in St. Johnsbury, online, thebarrettagency.com, Google, Facebook, and YouTube. Just look for Barrett Insurance Agency. And with this trivia question that Jeff's asking, just look for the smoke billowing up because that's my brain trying to figure out this trivia question.
Magic in the morning, going to take you back in time with the fabulous Thunderbirds.